What's up, everybody? I'm Ben with the BTC Sessions, and this is your daily session.
Hodl that Bitcoin.
Okay, so before we dive into the news, I just want to remind everybody, please do head over and check out my website, btcsessions.ca. That's where you can reach out to me and book me for your own personal BTC session to learn about the topic of your choice. Also, if you want to plaster my big dumb face across your chest, your phone, your coffee mug, you can do that on Teespring. I do have some shirts up there or hoodies that you can grab if you'd like to do such. And finally, I'd just like to say thank you to the people in the super chat the other day when I was airing one of my videos. They were in there and they ended up dropping about $30 worth of tips in that video. So I'm very appreciative. I do a lot of this content essentially for free. So I want to have a very heartfelt thank you anytime somebody drops a tip like that. It means a lot of difference to me and I really appreciate it. So moving on, let's get into a couple things that I found interesting today. So first off, I want to direct you to another content creator that I've really appreciated I guess I've been listening to him the past few months here. His name is Peter McCormick, but his podcast is called What Bitcoin Did. And I was listening to this podcast early this morning with John Carvalho. Now, this is the guy that famously interviewed Roger Ver to the point of him essentially freaking out, flipping the bird, and ending the interview early. So it was I guess, a famous moment in what is now Bitcoin history. But this was a great interview between Peter and John, and they get into the topic of defending Bitcoin and why John is so outspoken and sometimes trollish in the way that he approaches things, and how him and Peter initially, among talking to each other, kind of had almost a falling out. And then when Peter took some time to go back and read some of the history of Bitcoin and what happened during the SegWit 2x fork that was planned, he started to look at what John was saying about the situation and said, well, I better go back and chat more with him and see if he'll come on the podcast. And so it was a really great conversation. So Peter, I've got to say, I really love your stuff and thank you for doing that interview. I'm also very excited to see John. He's actually coming to Edmonton for an event that we're throwing called the Bitcoin Rodeo that will be on March 5th and 6th. So I'm excited to see you here, John. Anyways, let's move on to something that was kind of hitting the news the past few months and has pretty much died out, but the Bitcoin death spiral was hitting the news kind of into December, late last year, even early this year, a few weeks ago. It was still petering out, I'd say, and you would regularly see things like this. Bitcoin is close to becoming worthless. Bitcoin is now entering a death spiral. And the reasoning was that the price of Bitcoin was dropping below the level where it was profitable to mine it. And if you've been around Bitcoin and done some digging and started to understand the way it works, you would have known that not only is this a non-issue because it self-corrects the difficulty, so the people that are the least efficient when it comes to mining will start to drop off, but then it will become profitable for everybody else. So it does self-correct. Also, you would know that we went through this whole thing with more or less the same series of headlines in 2014-15. So essentially it's just the news cycle repeating itself. And sure enough, this was a tweet that happened just yesterday from Drive Markets. Bitcoin's hash rate is up over 35% in the last 3 months. In November 2018, it was 32 million terahash per second, which, if you don't know what that means, not relevant, but you can see the metric has gone up quite a bit, 43.5 million terahash per second. Also, I believe it was Jameson Lopp, a Bitcoin developer. He works for Casa now. Anyways, he was pointing out the fact that in 2018, even though there was this huge amount of worry near the end of the year about the hash rate dropping off, it still ended the year with double the hash rate, double the amount of computing power in December as was started with in January 2018. So the network was twice as secure in a single year. So really, it was a lot of fuss about nothing. Let's continue on. We've got a little bit of an analysis regarding price. Now, I'm not going to get super specific here, but I will kind of outline what's in this CryptoCoin News article and what I think about it. So essentially, they're saying that 2019 is looking like it's a year of accumulation for Bitcoin, and they're looking at a recovery by the year's end. So they're saying that, they're looking at very short term in the beginning here is, we recovered 120 billion to 123 billion. 3 billion can move in the market cap in seconds. So I don't really pay attention to anything super short term. So they're essentially seeing a slow grind up for Bitcoin in 2019. They think that it's going to be pretty volatile the next little bit, maybe between 2,000 and 4,000. They're expecting possibly another drop down to the low or below. 31.22 was kind of the low that we saw in the last couple of months here. And I'll just read this quote here. But despite the technical setup that suggests bullishness is possible, there's a lot of on-chain volume to fuel a prolonged up move. There's not a lot of on-chain volume to fuel a prolonged up move. What we saw in the last 7 weeks was a spike of on-chain volume driven by volatility, coins moving to exchanges to trade. The initial volume spike false signaled a faster detox and an earlier end to the bear market, but in fact, it was a volatility side effect. That move from 6K to 3K created immense trading volume, but it was in no way a signal that accumulation volume had begun. So essentially they're saying, hey, we're kind of petering out and maybe coming to the end of the bear market, but it's going to take a slow, steady recovery to get back to any semblance of a bull market. The BitMEX CEO Arthur Hayes suggested that tokens and smaller blockchains with weak fundamentals will probably have a pretty tough struggle through 2019. I can't argue there. And if Bitcoin endures another correction, this will probably be even further amplified. So what do I think about this? Yeah, I pretty much agree. I think this year we're probably going to see a lot of sideways action. Sure, we'll see some volatility, but I'm not expecting anything huge in any one direction for an extended period of time. And maybe by the end of the year, we'll start to see some pops. But again, this is just pure speculation on my behalf. I did make a prediction back in March of 2018, and I kind of outlined what I thought I would see for the next, I guess, 3 years. And I know that's ridiculous, but from what I've seen so far, it's more or less kind of followed that pattern, and all I was doing was looking at what happened in the past and said that it would probably rhyme. So if you want to check out that video, I'll put a link to that down below, but I'm pretty much standing by what I said. I think it's going to be a slow, kind of boring year, a lot of sideways, and then we'll start to see little pops near the end of the year through 2020, but no new all-time highs till 2021 is my guess. But we'll see. I guess we'll see. Let's move on. Now, this was a story that I should have covered yesterday, but unfortunately, when I dropped my video yesterday, this was just kind of hitting the news. Anyways, Ethereum was supposed to be upgrading, forking, whatever you want to call it, to Constantinople. So they were going to be doing a hard fork upgrade on the network, but guess what? Somebody found a critical vulnerability. So there's a smart contract audit firm called Chain Security, and they flagged it just yesterday, saying that this improvement protocol would essentially allow attackers to find a loophole and possibly steal user funds. It is very similar to the loophole that happened in the DAO. Now, if you're not familiar with what the DAO was, the very first one, the Decentralized Autonomous Organization, it was more or less meant to be like an automated company where people could buy parts of the stock or a portion of this digital corporation, and depending on how much of it they owned, they could go ahead and influence the direction that autonomous organization would take, or they could split apart and create their own organization if they didn't agree in the direction. So what ended up happening is somebody found a loophole where if they went to split the company and they went to take out their own funds, in the middle of that transaction, as it was executing and they were being refunded with their ether, they were able to execute the exact same function again and essentially be withdrawing forever. And so they started to see funds being siphoned off to the tune of, I believe, between 60 and 70 million US dollars. And fun fact, that's actually what contributed to the split and the creation of Ethereum and Ethereum Classic. Ethereum Classic is the fork that said, we don't want to reverse this because if we reverse it, we are essentially getting rid of the main point of a blockchain, which is immutable transactions. Ethereum is the fork of Ethereum Classic, even though it got the title because the majority of people went with that fork. They're the ones that actually changed and reversed the transactions of the hackers so that that person no longer had those funds on that particular chain. So fun little bit of history for you if you didn't know. Essentially, this bug would have allowed a similar style thing to happen in, it seems like, any contract, but here's a quote here. Imagine that my contract has a function which makes a call to another contract. If I'm a hacker and I'm able to trigger a function while the previous function was still executing, I might be able to withdraw funds, and they would be able to continue doing that over and over again until the contract was drained of its money. So not great. They are having a conference call, it sounds like, on Friday to decide when they're actually going to release this, how long it's going to take. So I don't know. For me, this is just another example why the move fast and break things approach is not super desirable, especially when you're dealing with people's money. Imagine had this rolled out and somebody had exploited it. What would happen? Would there be another hard fork of Ethereum reversing that? Would people just be shit out of luck? Part of the thing about the DAO hack was that it was actually, the money was kind of cordoned off in this particular contract, so they only had to reverse what happened on that contract, and they didn't have to reverse other transactions on the rest of the network. Whereas this looks like it would have affected a lot of people. It wouldn't have been really just cordoned off to a single contract. It could have been affecting the entire network. So kind of scary here, but it looks like maybe they dodged a bullet for the moment, but I can't imagine that something like this won't pop up again in the future. Anyways, we're going to move on to some interesting news out of Belarus. Now, there has been a platform launched that allows people to buy traditional assets with Bitcoin. So what do I mean by traditional assets? I mean things like gold, oil, or shares of a company, really anything you could get on a stock market. So there are two entities, VP Capital and Larnabel Ventures. They essentially claim it's the world's first regulated tokenized securities exchange, and the project seems to have been given the nod by the government as its unveiling actually happened on state television. So I find news like this interesting, but I do have issues when it comes to tokenizing something that is pegged to a real world asset. So now let me get this straight. I am a Bitcoin maximalist. So I see, when it comes to blockchain technology, I'm interested in sound money, and I think that not really any project is going to be able to stand up to Bitcoin when it comes to sound money. Now, when you get into stuff like tokenizing securities, is that useful? Perhaps, if it was allowed to be actually used the way that would benefit users. But here's the thing. So if you were to tokenize a security, a portion of a company that somebody could own, where I could see that being useful is if individuals were able to hold their actual securities in their own wallet and trade them peer-to-peer individually. I think that could be useful because you're taking out that middleman. And not only that, you're not issuing a new currency or a token that might or might not be used with a company. You're issuing a part of that company, and that can actually be utilized as what it is. Essentially, the asset is the digital asset. The asset is not something real world. Where I have issue with this is when you get into things like gold and oil. So imagine you have a brick of gold and you create a digital token on a blockchain that represents that digital gold. Well, the whole promise of blockchain, say with Bitcoin, you know you have Bitcoin because you have Bitcoin. You're looking at it, you're checking the blockchain, it's in your wallet, you have the keys to that wallet, it's yours. Well, in this instance, it's a token representing gold that's in your wallet. You could feasibly check and say, okay, I have the keys to this token. So yes, you have the token, but you're trusting somebody else to audit and be sure that the gold is there. And so you've injected trust into that system. Why use a blockchain at that point? Because you're already trusting somebody else to do the audit. The security of the blockchain is irrelevant because you're relying on somebody else to assure that the actual asset is there. Now, the other interesting thing here that I'm unsure of is they're talking about offering things like, they mention Apple stock in here. Now, is Apple stock actually created and denominated on a blockchain? No, not right now anyways. So it seems what's happening is somebody's holding on to the Apple stock. They're then creating a token that represents the Apple stock that somebody is holding and issuing that token. So does that allow them to fractional reserve Apple stock at that point? And how is that being checked? I don't know the answers to these questions, but they're good questions to ask. That is my issue with this. When companies actually issue their stock via blockchain and there's an actual digital asset that cannot be counterfeited or duplicated, well, maybe there's a use case there. But when you're adding these layers of trust on, I don't know. We'll just say this is not for me. Okay, we've got a couple more stories here. Binance has now launched a fiat to crypto exchange, and it's based on the island of Jersey, which is a British self-governing dependency that seems to be pretty crypto friendly. Now, to be clear, this is completely separate from Binance.com. Now, they're related, they're using the same technology, but I think they've more or less done this to kind of separate the companies so that what one doesn't affect the other legally. They've got different compliance team, different people heading things up. So, yeah, I guess this is, to be honest, I don't really find this that interesting. I just saw everybody's talking about it today, but I don't know. Cool. You can now buy Bitcoin with pounds. Couldn't do that before. I don't know. I'm going to skip that. I don't even want to talk about this. Anyways, I'm going to finish with just kind of a fun story I thought was, it's not even really a story. It's more just kind of a reality check of where are we at when it comes to Bitcoin. So the title of the article from Bitcoinist is Bitcoin Too Risky? US lottery ticket sales exceed the entire Bitcoin market cap. So this is just kind of a check of your head to realize how early in the game everything is. So every year, U.S. citizens spend north of $70 billion on state lottery tickets. It's almost $8 billion more than the entire market cap of Bitcoin and much more than the other half of the entire crypto market cap. So it just kind of gives some stats of how much is spent on lottery tickets. The reason for this comparison is, I think, who was it? It was some politician essentially compared buying Bitcoin to buying a lottery ticket. But really, you're buying a lottery ticket, you're for sure flushing that money down the toilet. You buy some Bitcoin, you're potentially taking place in a monetization event. That's my hot take on it anyways. The other thing that they draw attention to is that the number of Facebook active users, and some of you may be saying, who still uses Facebook? But the number of Facebook active users is 2.3 billion active monthly users around the world, whereas Bitcoin, it looks like the Bitcoin Market Journal is placing the number at around 22 million Bitcoin wallets as of July 2018. So it's an early stat, but I mean, 22 million, it's really nothing. So when you're looking at this stuff, I know that a lot of us can get really super deep into the space and think that everything is already mainstream, but the majority of people, even if they've heard of Bitcoin, they have no idea what it actually is, how it functions, what the value proposition of it is, how it might affect their lives in the future. So keep that in mind, being in the Bitcoin space. You guys are all very, very early. I mean, I've been around for 5 years now, and I felt early then, but it's still super, super early. And I think it would do us all some good to remember that and to sometimes be patient with new people coming to the space, because I remember I thought a lot of dumb shit when I got into Bitcoin. I thought I understood everything. I had plenty of time dabbling in altcoins and shitcoins and all that kind of stuff. And it brought me to where I am now through a ton of reading, a ton of watching, a ton of meeting and having conversations with people. So yeah, there's a lot of learning to be done. There's a lot of building to be done, and I'm excited to be a part of that. So guys, I will say thank you very much for coming in to check in on your daily session, and I will see you tomorrow on the BTC sessions.